all our esteemed investors. We welcome you to the new week and to the only month of June. We appreciate you for your time and for joining this morning market review again regarding our financials market. We'll be taking you through, as usual, we'll be taking you through our equities market, and thereafter we'll also see what also transpired in the morning and fixed income market, and then we entertain question and answer. In the course of last week, equities markets week on week recorded 1.73%. We could see that for the entire 5 trading days of the last week, starting from Monday, for those 5 consecutive days, equities market recorded gains. Monday gain, Tuesday till Friday. The bull was able to dominate the markets. It was a big occasions to the equities market. Bull was able to take over the market for the entire 5-day trading session of last week. Market gained 1.73%. In terms of all share index, we were currently at 99.38 basis points. And then when you compare that to what we recorded in the previous week, we were at 9.7612 thousand. And then in terms of trade turnover, in volume, we did higher, we did better in terms of volume. The last week we had 2.189, but the previous week we had 1.98 billion units of shares. If you look at the difference, that's close over 203 million units. But in terms of value, we did better in the previous week than the last week, because the last week we had 31.3 billion naira, and then the previous week we were at 40.72 billion. Financial service industry still dominated the market, still led the charts. And they also accounted for about 87.41% in terms of the volume, and in terms of value, they also cornered 76.42 billion. So 76.42% of the total value of the transaction that took place in the equities market. And the key drivers of the performance we recorded in the equities market last week were the volume, the Abbey nominees, Abbey Mortgage Bank Limited, and then the Access Holdings, and then Zenith Bank. The 3 financial firms banking, they traded 1.12 billion worth of shares, and in terms of value, about almost 14.9 billion naira. And they're looking at the contribution of those 3 key drivers of the market. They contributed 51.57% to the volume, and then to the value, they also contributed 47.64%, telling us that the impact of financial service trade in our equities market cannot be overemphasized. They are very strong. So in the last 6 weeks, we've been talking about the equities market performance. They've always dominated. And then the market capitalization has also gone to 56.71 trillion. That was also very impressive compared to what we had in the previous trading section. So, and then this is just to also tell us that for the entire 5 trading section, we could see the all share index vis-a-vis the NGX 30. NGX 30 capture the movement in the top 30 capitalized stock in our equities market. So on Monday, Tuesday, Wednesday, and Thursday, and Friday, those 5 trading days, equity markets was able to move on a bullish trend, which was the reason 1.73% were cornered or were recorded in terms of performance was possible in the course of the week. So we are going to see what is going to happen in the course of the new week. But looking at the sectoral performance, financial service firms still corners 87%, because most of the activities took place around banking and insurance sectors of our market. And oil and gas also gained 3%, and then the agriculture 2%, and then others also recorded 8%. So the key returns under this capital coverage, out of the 4 out of 5 indices under our coverage, NGX banking gained 8.72%, and that was possible because we can see renewable interest in some banking stock. The likes of FBN Holdings, that's the First Bank Holdings, also moved from 20 naira 40 kobo to 23 naira 45 kobo, almost about 14.6%. We saw UBA also gaining 56.3%. We saw Zenith Bank also moving up. CMB also gained 5%, and then Fidelity Bank also gained 22.89%. These are the reasons why NGX Banking was able to expand better than the previous week by 8.72%. Insurance was also not left out. We saw 3.88% because of the result of the insurance company have been approved by the NICOM. So most results were coming to the market and they were also very quite impressive. By oil and gas, Seplat's approval by the NNPC trigger the price of Seplat from 3,000 to almost 3,400. So that also expanded the index. Consumer goods, we saw the new interest in Dangote Sugar and the NASCON PLCs as well. So, but in terms of industrial index, there was not much activities in those segments of the market because we couldn't really see much traction in Dangote Cement, Boa Cement, Beja Paint, and a few other companies that are under the purview of the industrial. Our month-to-date performance, that for the month of May, we were at 1.09%. Our quarter return, that has also moderated to minus 5.06%, so minus 5.03%. By the time you compare that to where we are in the previous week, we are over minus 6%. Our year-to-date return has also climbed up to 32.86%. That is also very impressive. So as we see renewed buy interest in the equities market, we are likely to see more movement in the year-to-date return moving up. In terms of our analysis and capital gain, for the week, we have also reviewed our recommendations across buy, hold, and the sell. For the new week, this week, our Access Bank, GTB, UPE, Zenith Bank, Fidelity Bank, United Capital, ICO Insurance, they are under financial service. We have placed them on buy because if you look at the previous price, the price has also gone up. Access Bank is 17.20 now. It's also under buy. GTB has also closed 40, has also gone up, it's still buy. UPA still buy, Zenith Bank buy, Fidelity Bank, and a couple of other stocks. And then for the insurance too, we have also seen their result coming to the market. IXCO has also declared 50 kobo, 5 kobo. Marshall Insurance has also declared 34 kobo. For Sodian 65 kobo. So they are still cum div. So for those who also want to take position in that index, insurance index, it's also a good buy. These three insurance companies, they are good to go. But they are still cum div. We can buy into it. Why for conglomerate? Our UAC is also buy. Unilever is also buy. WAPCO is under industrial. We are also recommending buy. Okomo is under agriculture. And Presco is under agriculture. We are also placing those companies on buy. Total is also a buy recommendation. So we could see 1 to 15, they are buy recommendations for Lead Capital PLC, while 16 to 20. So Stanbic IBTC, Sterling Bank Financial Service, MTN, Flour Mill, and Seplat, we are also placing those companies, those first stocks also on hold. While May and Baker, we are also placing May and Baker on sell because it's still trading above the valuation. For the macroeconomics update, no update yet, other than what we reported in terms of our GDP growth rate for the Q1 of 2024. As we receive any information regarding key variables that will drive equities market and fixed income markets, we're going to update you accordingly. For price adjustment for the week, the following three stocks also were adjusted for the price and the cost of last week. ABC Transport has been adjusted, and then the Living Trust mortgage has also been adjusted. It used to be Omoluabi mortgage, and then the Sky Aviation has also been adjusted. So these three companies, they are ex-div now. So if you are buying, you are not buying from div. In terms of expectation for the markets for the week, we are looking at for the new week, we expect again unselected tickers insurance company. I've said it that we've seen some results coming to the equities market, and those results for insurance company, they are also very impressive. We've seen like almost 5 results. So that index is likely to expand in the course of the week because of their financial year for 2023. That has been very impressive. Also, we also expect to see continued buy interest in Tier 1 banking stock that are also trading far away from that 52-week high. The foreign market price is still very cheap, and then that also is also more rewarding. So you see investor also taking more buy interest in those Tier 1 banking stocks, the UPA, the GTB, the Access Bank, and those other stocks we have also placed in our buy recommendations. We also expect to see mixed performance across 6 sectors. the banking, insurance, oil and gas, and industrial and consumer, the sector is likely to be mixed. We will not really see those 5 indices closing positive. It means can be 3-2, ratio 3-2, or ratio 2-3. So in that order, we are likely to witness that in the course of the week. And then we are not also ruling out the possibility of profit taking. When I was talking about the first slide, we've seen some stock, the likes of First Bank and a few other companies gaining over 14-15%. So when you say profit taking, we may say profit taking around some of the stock that has gained above 15 to 20% in the past week. People want to take advantage once they're able to take out their transaction costs, and then that's for the momentum traders. You see that happening in the market, but that may not be applicable to the value and the growth investor. But for the momentum investors, you may see them taking advantage of the capital gain in some of the tickers. While MPR hike by the 150 basis point will continue to dampen the investor sentiment in equities asset due to elevated yields in the fixed income instrument. We cannot underestimate the impact of the MPR hike in the equities market. We may still see some funds movement to the fixed income and then to the money market instrument. So people want to corner a higher return, and we are seeing rates above 15-16% in that segment of the market. So, and then overall performance for the week, we're expecting market to also close on a bullish note. So the bull is still going to win the race in the course of the week. Our actions, investors are advised to accumulate fundamentally tickers with a good entry price in their portfolio. And why we also are encouraging people not to do panic selling, and then invest in companies that are also based on fundamentals. Thank you. We'll take the other sections of the fixed income market, and we'll take question and answer.
All right, thank you very much. Happy New Month. Start the presentation. We're looking at money market and treasury current rates and previous rates. Now, if you look at the slide, you would see that studying it closely, it has been on a sinusoidal movement. Previous week before last closed on 29.94% for the open repo, and for the overnight at 30.66%. And then this previous week, that's last week, 32.40 and 33. And then this week, you're looking at the 29.09% and 29.94, respectively, for open repo and overnight. Now, this shows a sinusoidal kind of movement in the rates and also in the changes, looking at it. Now, on the slide here, it shows that the funding rate closed lower, following improvement, weakness in system liquidity. Now, liquidity is always a major part of the market, especially in fixed income. It cannot be overemphasized. Previous week, it was spurred by unmet bid auction. But this week, looking at it, the treasury bills, secondary market, there was a positive sentiment, also due to buying interest in the secondary market. Then for the OMO market, that's the open market operation, it closed bearish, same as last week. There's an adjustment, elevated yield. Last auction, overall yield across the curve advanced at an average 64 basis points, closed at 21.43%. And below, we see the previous result for the last treasury auction. Stop rate, the previous stop rate, and then the yield. We can see also playing around 16 to 17% ranges for the 91 days, and then for the 182 days, also 17 to 19%. And then for the 164 days, playing around 20 and 20 to 30%. But adjusting and critically, looking at it, closing at 20.69%, 20.7, sorry, for the last stop rate. All right, so for the fixed income market, for the bond market, we can see the secondary market that closed on a bearish note. Tenor basis yield across the short end, as you can see in the curve there, shows a 2 basis points week on week. And then for the 2025, 2050, 2025, 2050, 2031, 2033, and 2034 maturities were actually traded last week. The FGN Eurobond market started on a quiet note for the week and then moved close the week on a bearish sentiment from hawkish stance stemming from the Fed officials. We saw last week that the GDP rate was adjusted from 1.6% to 1.3%. And then looking down at the foreign exchange markets, we see all on the red. And we also stated previously that the conditions put together to moderate this rate was a short-term condition. So looking at it, it's tilting back 1,482. That looking at the rate closed against the dollar, I see this still going up because when there is a monetary policy not matching, the fiscal policy not matching the monetary policy, we tend to see an imbalance in the system. So that you have the foreign exchange. And then for the week, we see we're having an auction this week, primary market auction on the 5th of June. And so the system, we see significant inflows because 221.1 billion for offer. We'll see how it goes for subscription and then allotments. Then for the bond secondary markets, expected to trade in line with system liquidity. Then for our products, we have the lead fixed income fund, a very good product to invest in, cannot be overemphasized. For long term, also the lead balance fund for those who don't have appetite for the risks in the equities markets, they can hedge in the lead balance fund, moderating the risk factor while buying a little components of the equity market and also a little components of the money market fund instruments. Next slide, please. And then for the lead dollar fund, for those who have dollars and want to diversify their portfolio and also key into this fund, I tell you, looking at the lead fixed income fund over the years from 2017 till now, it has done 100% plus in terms of increase and yield. So this also can follow that tune and do better. So I encourage our investors who want to diversify their portfolio and hedge against the Naira to invest in our lead dollar fund. And then for our fixed income and fixed deposit product, that's lead Gazelle portfolio, having a fixed tenor for a fixed rate, we can also encourage clients to take position in this particular product, knowing that you have a fixed tenor and a fixed rate, and this helps you to plan your money properly. Plan your money properly. Sorry. And then for the Eurobond market, it's also a good product to invest in. Why getting bi-monthly dividend on your investment, access to sub-Saharan Euro bonds, and also, like I said, coupon are paid bi-monthly, annually. Sorry. Thank you. I'll move over to the question and answer segment.
Okay, thank you very much. It's time for a question and answer regarding those two presentations in the equities and fixed income market. The floor is open. We are expecting questions from all our various value players. Please, time for question and answer.
Yeah, okay, we have a question here. Client says, what is the possible rate for treasury bills, I guess, for the next auction? The auction is often largely determined by how aggressive the borrower, that's in this case now the central bank, is when they come into the market. But it would be too early for us to tell or to give an expectation of what the auction would do. But by tomorrow, by close of business tomorrow, by the time the market closes tomorrow, we'll have a clearer indication of where the rates will most likely end or most likely stop. Having said that, but looking at the last auction where on the 1 year bill, we close at 20.69. We expect that the next auction should also close somewhere around that line, at least anywhere around 20.5 to 21%. That will be my prediction for now. But by the end of tomorrow's session, we'll have a clearer view of what the auction is likely going to look at. But albeit, it is still a very good rate. We were at 20.5 or 21. Although when compared with the inflation rates, we are still in a negative zone. But they can always do better. But I think anywhere around 20.5 to 21% won't be a bad. Yeah, great. Mr. Peter, your mic has been enabled. You can ask your question now, sir.
Thank you very much. I want to know the difference that is in the Treasury bill also. I want to know the difference between when you want to leave your interest in maturity and when you want to collect your interest forward. Like now, if I have, okay, the minimum, if you want to buy everything, let's say 50 million now, you have 50 million to put. Which interest would they give to me if I want to leave the interest after, and get the interest and the capital at maturity and the interest they will give me if I want to get the interest now? Because I read something about implied interest and all those different interests. Thank you.
Okay. Yes, sir, Mr. Peter. Thanks for that question. I think I understand that you're just trying to know the difference between where the discount rate is applicable and the yield. So basically, let's say, for instance, you're looking at investing 15 million naira, and then that is your target maturity sum. You're looking at upon maturity, I want to get 15 million naira by the time this bill matures. And that particular scenario, it is a discount rate that will be applied on your sum. So that means 50 million naira today, let's discount it by the number of tenor, the number of days you're looking at. That would give you the discount amount you'll be paying today. So the discount rate applies when you're paying lower than what you intend to get at maturity. Let's say 50 million naira is what you're looking at getting at maturity, but then how much are you going to pay today? So we apply the discount rate on that. But where you want to invest the entire 50 million naira, and then upon maturity, you get a sum amount. So in that instance, we apply the yield on it. So basically, it is just, are you investing an entire sum today to get your maturity in the future, or you want to get your interest upfront? So that's the difference between when the discount rate is applied and then when the yield is applied.
Yeah, okay. All right, thank you. I seem to get what you explained, but however, is it the same interest rates they use for both of them? Because you talk of like the last TB that was sold, you talk about 21%, but I think in another instance, they are talking of 26%. Is it because of the fact that somebody is taking interest ahead? That is why they are using different interest rates?
That's correct, sir. That is correct. If you're getting your interest upfront, discount rate will be applied on your investments. But if you're getting your interest and principal and maturity, we'll apply the yield on it. All right, thank you so much. We have another question here. Throughout last week, literally on the RAPSI, and yeah. So sorry, is there anything wrong with the application and what is being done about that?
Okay, for the application, there's some glitches and our technical team is working on it. So by this week that we're entering, everything will work perfectly. There's a glitch that our technical team is working on it. So sorry for the inconvenience, Mr. Doka.
All right, thank you. With the acquisition of Moovy by Seplat, the company will almost double/triple its income. Don't you think it's time to change Seplat to buy to give investors opportunity?
Okay, sir, thank you very much. Very good question. Of course, the transaction has been sanctioned, but we still needed more information regarding review of our recommendation. For now, we are still placing it on what? On buy. I mean, we are still placing it on hold. So we're still going to get more information regarding whether we're going to change the recommendation. So for now, we still place it on hold because we have to see their results. We also need to do other valuations. We cannot say because of the fact that transaction has been sanctioned, and then of course it will improve the production of the what of the oil by 400,000 barrels per day. But one of the things we need to work on is to get more insight and more information regarding how the company is going to leverage on that acquisition to increase their performance over time. So for now, please place it on hold. When it's time to encourage to buy, we'll let you know.
Okay, thank you so much. If you wait for results to come out for valuation, the market will have overshadowed your estimate. I guess it's a comment by one of our clients.
Okay, it's very important to work on valuation. Valuation is the key metrics or the key factor you have to consider in buying the asset. The fact that that information has entered the market, that they have completed the acquisition, you want to take a position. How about people who had already bought at a lower price and they want to exit? If they are exiting, we don't know the volume, we don't know the extent to which they want to sell up their own holdings, and that will really have impact on the what on the price of that asset. So the only time to buy an asset is when you get your valuations right, just like what we projected in those banking stocks. They are trading below their intrinsic value. This is the time for you to buy. You don't really take aggressive action when an information move into the market in taking that decision. It's better to buy based on valuation. Thank you.
All right, thank you. So we have someone who has indicated interest to ask the question. Your mic has been enabled. You can ask the question, sir.
All right, good morning.
Morning, sir.
Hello, can you hear me?
Yes, sir, we can hear you, sir.
Okay, good. Recapitalization as announced by CBN for banks. Very many will do right issues. Has there been timetable? Is it a good idea to wait for the figures for the right issues, and what will be the figures for the right issues and what's presently trading on the floor of the exchange as at the moment?
Okay, thank you, sir. Of course, some of the banks have also submitted their report to the central bank, but though some will use the right issue to recapitalize, but we cannot categorically say that this is going to be the figure. By the time they want to do the right issue, the market price will also determine. The board will have met and they will have determined what will be the basis of the right. But the market price will also determine what the right price of those stock, of the banking stock, will look like. But it's also very important that anybody that wants to buy, based on the valuation we have indicated in those slides, it is better for you to buy based on those valuations, because by the time the right is out, you also see people that also want to acquire right, and you see people buying those stocks for them to be able to qualify for the right. So we may not wait for the time the right is going to be out for us to be able to take position in those stocks that are trading below their intrinsic value.
Okay, thank you so much. We have another question. If you invest, let's assume 100 million treasury bills, and you want your interest upfront, what will it be? Okay, so basically, all you need to do is to apply the discount rates on the face value you're looking at getting at maturity. So in this instance now, you apply the discount rate of 20.69% on the 100 million, and they prorate it by the number of days. That's about on 364 days divided by 365. That would give you your upfront interest. Okay, with the fraud of over $67 billion in FBN holdings, do you see the price going to around 10 to 15 naira range?
Okay, thank you. The information we have gotten from the print media, I think it's about 43 billion naira. It's not 57, it's not 67 billion. The truth is that the company that has been escalated, the company is going to set up their team. They are going to investigate, and they've said that they are going to recover the money, but that will not really have much impact in the price of the company, because if you look at the capitalization of the First Bank to the 43 billion we are talking about, so it will be taken to the court, and I'm sure they will also recover that. But that may not really bring down the price to 10 naira to 15 naira, because the valuation of First Bank is far above the 10 naira and 15 naira stated as the price.
Okay, I think this should be our last question for today. When is Dangote Refinery coming to the market? The news is all around. What do you know so far?
We will still continue to monitor the markets. Many times they are coming to the market, they have to notify the stock exchange. But for now, It's just is a prediction that is coming to the market just as usual. Most of Dangote companies are listed in our market: the sugar, the cement, and the salt. So by the time that information comes to the market, it will filter around, and we're going to notify you accordingly. Thank you. So we have come to the end of today's presentation. We thank all our Varo customers, and we hope you enjoyed this presentation. The slide will be forwarded out by our research team so that we can also look at it again. Thank you very much. Do have a beautiful day from Lead Capital PLC. Good morning once again, everyone. Bye.